warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. First of all, I'd like to wish our CTMfile audience and our guests for today, Jack Large, editor of CTMfile, and Craig Jeffery, managing partner, strategic treasurer, a very happy new year and the very best for 2023. Gentlemen, this is our first podcast this year, and I am delighted to have the opportunity to converse with you again. On CTMfile.com, we have published a 3-part article series titled Top 10 Corporate Treasury Focus Areas from 2022 that are expected to linger into 2023. Of the 10 priority areas of the year gone by and those that are expected to continue well into 2023, we have chosen 3 focus areas for our discussion today, namely real-time payments, cybersecurity, and risk management. And we would love to get your views on what to expect this year from each of the 3 focal themes. Let's start with real-time payments. Asia Pacific remains the most developed real-time payments market globally, even as the US Federal Reserve's real-time payment network, FedNow, is expected to launch sometime between May and June of this year. This will enable businesses and individuals to send instant payments through the Fed's depository institutions. Craig, if I may start with you, do you think real-time payments will have a transformative effect on corporate treasury in 2023? And will this also make treasury more real-time data-driven?
I think there's quite a few people that are really positive on that. And I just see it as, for the US, there's always multiple channels, payments delivered through the Fed, through the central bank, and then payments set up through other networks. So we have multiple numbers of faster payment schemes that are set up. And so the Fed is a little late coming to the dance, so to speak, but they're the Fed. So as a central bank, that'll be a positive factor. And there's a number of good capabilities that they're building in. Now, it is late and delayed compared to many areas around the globe where faster payments, the ability to communicate, requests for debits and the like are being built into this. So it will be beneficial. I don't know about transformative, but it'll be incremental. So I think I would say that these are incremental changes. Everyone's going faster. Everyone wants more information, better processes. And this is happening across the globe at varying rates. So for the Federal Reserve, real-time payments is a necessary development.
In the UK and in Europe, we've had real-time payments for nearly a decade, I think. Certainly in the UK, the real-time payments has been the fastest growing type of payment in the whole of the UK. This is reflected in all sorts of different ways of doing business. What I think we need to take from the move to real-time payments is it's going to change the way we actually do business. Treasurers need to tie into this to be able to open up the opportunity for their companies, for their businesses. This is happening dramatically in places like India, to a lesser extent in China, but we're going to see it worldwide. The other piece we're going to see is that real-time payments is going to be linked with cross-border payments. So we're going to see more and more real-time cross-border payments, not necessarily in SWIFT, not only in SWIFT, but in all sorts of other smaller, technologically innovative solutions, which are going to change the way we're going to do business. The other piece of changes in payment systems, in real-time payment systems is, and there's a brilliant diagram from EY on the overall trends, and they pick up on one very important piece, which is invisible payments, where they're incorporated in the payment and the service itself. And what we've seen in Europe is increasing use of subscription payments. So you don't buy a product, you buy a service which you pay monthly. Spotify is a classic example of the music track sharing service, but there are many others. And what we're starting to see, or what I'm starting to see, senior business people are saying, right, we need to change the business model. Real-time part of payments is part of it, but the other part is incorporating the payments in the service itself. So you don't buy a product, you buy a service. And we're going to see more and more of that. It's going to transform business.
Jack, your comments earlier about interoperability for cross-border settlement, I think is one of the key drivers over the next 5 to 7 years. Certainly this idea of speed and value of information, all these push for better settlement. And Jack, as you're hitting on this, invisible payments or embedded payments. Payments are just a way of exchanging value for whatever it is you have, whether it's a service or a feature. And for too long, it's been this bolt-on. Why can't it become more visible is really where we're driving to. And I think you've got the right view, whether that's 10 years before most payments are invisible. They're certainly becoming invisible and more embedded. And that's a good trend. Nobody wants slower. Nobody wants inefficient.
But they also want to be able to manage the payment flows. Moving to full real-time payments isn't going to happen overnight in treasuries and accounting departments, payables and receivables. There's going to be quite a lot of adjustment to take place. But the move to more immediate, more real-time is undoubtedly here, and it's just going to accelerate.
From real-time payments, let's move forward to cybersecurity, the next focal area that is expected to be top of mind for corporate treasury in 2023. Russia's war in Ukraine raised cyber risks worldwide, as did the shift to remote work, which caused a major rise in cybercrime in 2022. As superintendents of payment security, treasury professionals face an uphill battle trying to combat cybercrime and payment fraud. Craig, what might we expect for cybersecurity in 2023, and what would you advise corporate treasurers to do better to combat cyber threats in 2023?
Yeah, so a couple of things. And as a superintendent of payment security, that doesn't mean you're directly responsible for all of the security that goes on in an organization, cyber, currency, the threat to the payment system. We know that cyber fraud, these attacks, continue to increase in sophistication. That will not change. So the defense has to continue to grow. So what will we see? We are seeing, and we do expect to see, a significant increase in companies evaluating their payment security, securing the entire inventory of their payment processes across the globe. Many organizations find they have numerous payment processes. The core ones may be well shored up, but there's quite a few exposures across the globe for many companies. This will definitely be on the action list for companies to do that. This will also include and increase the amount of training that companies have for payment security, not just cyber security, but payment security, from AP to human resources and payroll to treasury. These are some of the most core areas. And then the last area that I think we should be aware of on the payment fraud front is we live in a more interoperable world. Exposures come from our partners. And so companies like BitSight that do monitoring, external monitoring, will continue to grow in importance. You'll have a score for what goes on. There'll be visibility to other of your trading partners on a more real-time basis. We expect more of this type of monitoring rather than the initial wave of here's a vulnerability scan, here's a penetration test that's done once or twice a year. There'll be more real-time monitoring for these items, and that will be a factor in who can do business with whom in many of these business-to-business environments. So that's the trend. We have to shore those up, and we have to think about security on an end-to-end basis.
There was an important piece of research that CTMfile covered last month, I think, but might have been in November. But it showed that actually the allocation of budgets to cybersecurity control had actually not increased, which is really very worrying from my point of view, because the integration of real-time payments means you can have real-time fraud as well. So your security needs to increase rather than decrease. The other piece that I see coming is increasing looking for insurance. We're going to see more and more of companies, and I know Lloyd's of London are increasingly getting this, of companies wanting to insure themselves against fraud in the many different types. I think that's also going to increase. My recommendation for treasurers would be go back to basics and look at where your fraud is and potential fraud is internally. A lot of the fraud comes from internal sources or internal weaknesses. That's where you need to start.
The third theme from 2022 that is likely to linger into 23 and may involve corporate treasurers spending more time on it is risk management. Risk management is core to the treasurer's role and is climbed further up the agenda, particularly in the light of the variety of risks corporate treasury had to face in 2022 that included currency risks, interest rate, liquidity, credit risks, enterprise, counterparty, geopolitical, commodity, and market risks. Jack, what according to you are the major risks that corporate treasury should prepare for to navigate 2023 comfortably?
I see three major risks. One is the growing risk of a global recession. For example, literally yesterday, an economics group in the UK said we're going to have a deeper and longer recession than ever before. And I'm seeing similar things across Europe. The other two things of the big risks are the climate change risk, which is growing all the time. And the third is the COVID pandemic risk hasn't gone away. If we see what's emerging from China, you could well see a new pandemic because there are rumors of a new variant, significant variant of COVID coming out of China. So those are the three risks that need to be managed. How you manage them will depend on different things. One of the excellent articles last month was on risk and needing to have a combination of risk management tools where you combined assessment with scoring and so on. And the key thing I took from that is not only do you need to use these different pieces, but the key piece for corporate treasurers is track your sources of information, track where your real core people you believe in, and those are going to be key to your survival in the next 12 months, 2 years.
The biggest risk factors we need to look at tend to be broader economic, unless you're talking about industry or company by company specifics. The recession has an impact on almost all the other areas, the volatility in inflation, interest rates. Whether there's a global recession or not, I think some of the economists are backing off from a global recession, but certainly for the UK, Germany, Russia, those are all recession predictions for 2023. Where you operate matters there. I think to some of Jack's point on monitoring, knowing where the data is, a big part of risk management is one, knowing what your risk appetite, your risk exposure is, what you're capable of doing, and then how do you monitor that? So getting good information to track and see where things are heading and where you have to act or react. What are you willing to bear from a FX standpoint with your growing sales in particular regions and particular currencies? Volatility in fuel or energy prices, if that's a huge factor directly or indirectly in your organization. So this idea of monitoring, being alert, and knowing where your edges are vital for treasury. And it's, we're in a more volatile period. We've been in a more volatile period the last year and going into 2023 than we have been for several years. But for those who've been around for several decades, it's not the worst. It's not the most volatile, but there's certainly significant signs of volatility. And so the risk management skills need to be put into place. Monitor what's going on and make sure you know how to react and when to react. And having a margin of comfort is always good advice. It's like a type of diversification.
The other point that was made in CTMfile by an excellent article from Push was this need to use scenario analysis, where obviously your experts on the ground are key. Your understanding of the business drivers is important. If you combine that with sensitivity analysis, the expert advice is important. The two together make a powerful combination, which is well worth using. I'm not sure how much treasurers have time to do that sort of thing, but the level of risk is definitely growing, and I suspect they're going to have to do more of it.
And that's a really good point, Jack. In Push, I know some of those articles talk about that in some depth. I know there's a lot of resources there, but this idea of what are the different scenarios that can come up and what's the range of what can occur, those with financial minds tend to go towards an expected value. What's the right number? And we don't need to think about the right number in terms of, the FX rates or commodity price or sales or the Fed's going to do with inflation rates. But we need to know what those ranges are and what the combination of those ranges can mean to our balance sheet, to our cash flow, to our earnings. That's where the game is. It's not the expected value like rolling a 7. If you roll 2 die, it's knowing that it can be 2 to 12 when you're rolling the die. And same thing with these scenarios. This is a less used discipline than it should be. I think that's what you were getting at, Jack.
Yeah. The other piece of that is that you'll need to be understanding and be part of the thinking process of your senior directors, and the finance director becomes more important. It's becoming more important by the day. Understanding the dynamics of their thinking and where they think the sensitivity is as key input to any scenario analysis and sensitivity analysis.
Finally, are there any other insights, thoughts, perspectives, or concerns you would like to air or share for the benefit of our audience? If I may start with you, Jack, first.
Complexity of what's happening in 2023 is growing almost by the day, coming back to those 3 risk areas of the global difficulties, recession type things, the climate risk, and the risk of another pandemic. It's understanding those together. And again, I go back to my point about needing to get involved with the very senior management in your company. The treasurer really needs to understand where they're coming from. That's probably the biggest risk. If they don't, they're going to be exposed.
For me, 2 of the 3 things we talked about today, real-time payments, and then risk management and cybersecurity. Cybersecurity and risk management are 2 similar themes, different types of risks. Both of those are very important. I guess when I think about that, risk management in 2023 is vital, particularly on the cybersecurity and payment security front. We have gotten by year after year on the payment security front with a certain percentage of companies being compromised, usually from the human element. But that will continue to grow unless people are being more careful with their overall payment processes. They have a clean inventory. They identify all the weak spots. They ensure that they have mitigating factors to address those. Not just assume that that's the case, but take steps to do that. And so that discipline on the operational side is a cybersecurity and payment security standpoint, and then the risk management a little bit more strategic. Those are key watchwords for 2023.
Thank you, Craig and Jack, for your valuable analysis and insights. We would also like to thank our CTMfile audience for their continued support and for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.